Hello traders, Cousin Vinny coming to you from theclosingprint.com, February 20th, 2022. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved lower, as well as the increasing number of bearish signals that we're getting as the markets pull back last week and geopolitical tensions persist. Support lies at 4,300. We had futures about 30 handles above that level today as the markets are closed. With resistance at 4,500, the Qs have resistance at 365, vol triggers at 4,430, and zero gamma is quite a ways higher at 4,503. In other words, the markets have a lot of work to do going into this shortened week of trading. The markets on Friday close off 10% from all-time highs with the potential for a retest of the Monday, January 24th low, while gamma support lies at 4,300. With a prevailing sense of weakness in the markets as gold gets bid higher, we also see the gold miners in the third panel versus the S&P 500 with gold outperforming and momentum clearly more bullish. As growth underperforms, we do see the NASDAQ Qs just above the 18% drawdown that we saw on January 24th from all-time highs, with the markets clearly in a downtrend, lower highs, a potential test of the lows this week, giving us reason to hedge and to add to hedges if weakness persists on Tuesday. In addition, we saw small caps manage a potential rally, still off more than 18% from all-time highs, was in a bear market for a few weeks as we proceeded down to January 24th's low. We were off 22.7%, with all indications that small caps might fail as well. They put in a lower low on Friday. And with all of the major indices pointing to potential lower lows and a potential test of the January 24th pivot, breadth shows no signs of supporting the markets at the present time. So we'll continue to hedge our positions and trade accordingly going into this last full week of trading for the month of February, post-OPEX. The yield spread is beginning to show us potential concern in the bond market, like we saw back in 2008, 2011 for the debt ceiling, 2015, and 2020, of course. The current state is showing a breakout above the December 1st pivot. As we follow the lead in the bond market, if this should start to spike higher, that would indicate pressure to add to our hedges and to stick with the prevailing downtrend until market participants start buying in a market way. For now, the bond market and this particular chart tells us to be cautious and be more defensive in the short term. We also saw the 10-year yield pulling back below 2%, so we're looking for the 7-10-year to rise as bond prices get bid up and institutions park cash in the safety of the U.S. Treasury bond market, as also can be seen in the 20-year rallying from Wednesday into Friday, another area where we've hedged for the short term. As the bond market starts to turn, we can see the ratio is starting to move higher, which is telling us to favor bonds at the present time and be cautious in the S&P and U.S. equity markets. At the same time, high-yield corporate debt and junk bonds showed signs of short covering, still below the 65-period moving average and bearish. Note the last time we had a break of the 65-period moving average was back in February of 2020, one of our neutral indicators going into this week. We'll also stick with our hedges in gold and silver as the safety trade continues to show persistent bullish strength, with RSI above 50 and trending and volume picking up along with MACD above its signal line. Brent crude has been a positive correlation to equity markets, so we want to see crude oil to an extent moving higher. However, last week we did see a little weakness that might come into play, so that's something we'll be watching as well. As sectors fade over the last week, this last week we saw a fade in most sectors with the exception of energy and some strength in metals and mining and leisure and entertainment stocks. We're also watching international markets with strength in Brazil and South American countries persistent. We'll look for that to continue this week or any signs of weakness going into this last full week of February. As we start trading on Tuesday, USO, crude oil, energy, metals and mining show the most relative strength, while consumer staples have pushed back above the 21-day and the 50-day, with the remaining sectors pushing lower and showing weakness. Now that OPEX is out of the way for February, there will be a reduction in put-heavy positioning, which should result in less negative gamma. That said, we're watching the IBD 50 and other scans for strength. There are only 8 stocks that look set up for the week. ABG, Asbury Automotive is flagging at the present time. Boise Cascade and BHP, both of them look like they could follow through this week as well. Metals and mining stocks, we did see commercial metals with a bullish pattern looking like it's going to follow through. Trending above the 9, 21, and 50-day. RSI is above 50. Volume has been increasing along with the metals and mining stocks that have showed follow through this past week, with Freeport-McMoRan just off of the highs, along with Rio Tinto, Vale, and some of the energy stocks like Callon Petroleum, Diamondback trending along its 21-day moving average, in addition to strength that we saw in MLI. Mueller Industries provides copper tubing for the HVAC, refrigeration, and plumbing markets, looking pretty good. Looking for a follow through and a push back up to 52-week highs. RSI is rising. We also noted strength in ocean and marine transports, which were moving higher last week. MATX, Matson, following through. We had Star Bulk Carriers also breaking out to 52-week highs with relative strength line climbing on above average volume. On earnings, they beat by 887%. Grindrod Shipping out of Singapore, another stock that pushed higher from this industry group. And Eagle Bulk Shipping, which is coming out of a cup and handle pattern, looking for a follow through this week. Stocks from the IBD relative strength, Alcoa Aluminum breaking higher. We had AIG Insurance, as well as Hershey's, Coca-Cola, MRO, Marathon Oil, Nucor Steel also breaking higher, looking pretty strong last week, showing relative strength at 52-week highs and looking for a breakout. And the metals and mining stocks and the steel group, which all show signs of strength. In addition, many of the stocks from scans that we ran where stochastics is oversold or turning. AutoZone looking for a bounce. Stochastics is about ready to turn. MACD looks like it could turn as well. Brookfield Infrastructure Corp, BIPC, nice little bounce at the bullish 9, 21, and 50-day moving averages last week. RSI is above 50, about to move into an area where there's no resistance. Berkshire Hathaway, watching for it to stay above the 21-day or test the 50-day this week. Church & Dwight from the consumer staples, makes baking soda and other consumer products like toothpaste and detergents. Cheniere Energy, CQP, from the LNG, liquid natural gas group, showing strength. RSI is turning higher, volume picking up. Stochastics looks like it might turn. MACD looks like it might turn as well. Consolidated Edison from the utility group, looks like it could continue. Volumes picking up, MACD and stochastics are turning. The Pure Beta Crude oil ETN also in a nice bullish trend, bounced on Friday. This looks really good for a follow through this week. Stochastics turning, volume increasing. PepsiCo and Coca-Cola bouncing last week as well. Looking for a follow through in Consumer Staples Industry Group as Coca-Cola breaks out to 52-week highs. In addition to PetroChina showing up on a scan, sitting on the 21-day moving average, looking for a bounce. Stochastics turning, MACD is flat, but volume is picking up as energy continues to show relative strength. Finally, as the markets show weakness, we are hedging. We'll probably add to our QID exposure. In addition, if the 10-year yield continues to pull back and bonds see activity from institutions, we might add to our position in TLT in the short term, along with SDOW playing the weakness on the Dow Industrials, along with our hedges in gold. We're watching how gold trades this week as well, as a signal for a potential test of the January 24th low remains a possibility this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, February 20th, 2022. As we start trading on Tuesday, just keep in mind the markets are weak at the present time. Futures are down at 43.09. We'll look for that support bounce this week and a potential test of the S&P 500 January 24th low at 42.22.62. I'll send out a watch list later tonight around midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check that out. Otherwise, take care. We'll see you in the trading room in the morning.